Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 27th, 2025, and we're diving into EOG Resources' latest earnings report for the fourth quarter of 2024. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. EOG Resources is a major player in the oil and gas sector, and their performance is always closely watched by investors and analysts alike.
Revenue and profitability overview. Let's start with the top line. EOG Resources reported total revenue of $5.585 billion for Q4 2024. John, how does this compare to their previous performance?
While the revenue is slightly down from the previous quarter, it's important to note that EOG's operating income came in at $1.592 billion, and their net income was $1.251 billion. This resulted in a net income per share of $2.23. The company has managed to maintain strong profitability despite fluctuations in commodity prices.
That's impressive. What factors contributed to their profitability?
Their ability to manage operating costs effectively, along with strategic asset management, played a significant role. Additionally, their focus on high-margin production areas has helped sustain profitability.
EPS performance and analyst expectations. John, let's talk about earnings per share. EOG Resources reported an adjusted EPS of $2.74, surpassing the forecast of $2.55 from 10 analysts. What does this tell us?
This is a clear indication that EOG Resources has outperformed market expectations. The adjusted EPS beat suggests that the company is effectively managing its operations and capitalizing on market opportunities, which is a positive sign for investors.
How significant is this EPS beat for the company?
It's quite significant. Beating EPS forecasts can boost investor confidence and potentially lead to a positive market reaction, as it reflects the company's strong operational execution and financial health.
Operational efficiencies and future outlook. Moving on to operational efficiencies, EOG Resources reported total operating costs of $3.993 billion. How does this impact their cash flow and future outlook?
The company generated a free cash flow of $1.277 billion, which is a strong indicator of their operational efficiency. Their net debt to total capitalization ratio is at 8.7%, showcasing a robust balance sheet. This positions EOG well for future growth and investment opportunities.
What can investors expect from EOG Resources moving forward?
With their strong cash flow and efficient operations, EOG is well positioned to capitalize on future opportunities in the energy sector. Investors can expect continued focus on high-margin projects and potential strategic expansions.
CEO/CFO statements and strategic initiatives. John, let's discuss any statements from EOG's leadership and their strategic initiatives. What are they focusing on?
While we don't have a specific statement from the CEO or CFO, EOG's strategic focus remains on high-margin projects and efficient capital allocation. They reported capital expenditures of $1.358 billion and a reserve replacement ratio of 164%, indicating a strong commitment to sustaining and growing their resource base.
How does this align with their long-term strategy?
It aligns well with their goal of maximizing shareholder value through disciplined capital spending and focusing on projects that offer the best returns. This approach should continue to support their growth and profitability in the long term.
Key takeaways. In summary, EOG Resources has delivered a solid performance in Q4 2024 with strong revenue, an EPS beat, and impressive cash flow. Their strategic focus on high-margin projects and efficient operations bodes well for future growth. Thank you for joining us, John.
Thank you for having me. It's been a pleasure discussing EOG's performance.
Thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on EOG Resources' performance in the comments below. Until next time.